Hello, I'm Julia Cordova. Thank you so much for subscribing to my YouTube channel and liking my videos. I really appreciate it. Today we're going to talk about where we are in the market. Are we at peak euphoria? Are we even in euphoria? I do not know. But we're going to figure it out together. We're going to start out by looking at a Tesla chart and some tweets, and we're going to go from there. It's very exciting. Whoop. All right. Okay, here's that Tesla chart. And first, it's naked, no trend lines on there. Do we even need any? I mean, the trend line is up. So anyway, I bring this to your attention because around July 8th, on July 8th, a comedian named Clarity tweeted, "Note, anyone investing in the stock market, now would be a great time to buy Tesla. They just got a price target of $1,500 and then another one at $2,070. And he tweeted this, guys, right at around what was then all-time highs at around $1,370 or so. And as of close on Friday, we were at $2,213, not even 6 weeks later. So pretty much right after he tweeted all-time highs here, we went into a bull flag and then broke out of that bull flag and then took another leg up. Now on Thursday, an Instagram model, an actress named Amanda Cerny, tweeted that she just bought 15 shares of Tesla. Now, I will tell you that when I saw this tweet on July 8th, I thought that was a little toppy. I thought, wow, you know what? Comedians giving stock advice, I mean, it certainly sounds like it, on Twitter, that seems just a titch toppy to me. And then when I saw this on Thursday, models, actresses, going ahead and just sharing their positions, I thought, that also seems a titch toppy. And then when I started reading, though, the commentary in response to her tweet, I got a little worried because I am a little bit bearish right now for the NASDAQ. And reading some of the responses, they're like, I can't believe she bought it at all-time highs, like top. And I'm thinking, gosh, you know what? A lot of people said that. But all-time highs in and of themselves is not bearish, not even a little bit. Now, I did put RSI on this chart because I do believe that just from this RSI, and in fact, the same thing happened right around the time that Clarity tweeted, that we sort of broke down from a little bit of RSI exuberance, if you will, and then came right back up, and they've had time to build some momentum here. There is potentially some divergence, so there could be some consolidation right now before we decide whether or not this is at all toppy. And that really does look like the most likely thing to happen, just based on some of the sentiment that I saw. And also just, because. So let's look at another interesting diagram from Helene Meisler. I think that's how you say it. It could also be Helena Meisler. I do not know, and I'm sorry. Anyway, she tweeted out just this past weekend the Citigroup Panic Euphoria model, and according to this model, we are at 1.2 euphoria. Now, euphoria, as I tweeted a few months ago, actually, we can stay in euphoria for quite some time, and in fact, that is what's happened. But the interesting part of this is, when I look at this euphoria measurement, we've got a 1.2 versus the absolute lows in the market this past, COVID crisis. We're at just negative 0.4. So we're 3 times, according to this measurement, not sure at all how they get it, but we're 3 times more euphoric than we were at the very lows, in which we were about 0.4 panicky. And I believe that, guys, because I myself had come up with this 5 stages of permeable grief on March 10th. And I said denial and isolation, stage 1, anger, kind of feeling a little bit sick to your stomach, stage 2, praying, stage 3, sadness, profound sadness, stage 4, and then acceptance and just sort of giving up on it all in stage 5. And here on March 18th, this is just 5 days, I'm not sure how many trading days, but 5 days before the bottom, I said stage 4 incoming. That was just the sadness. And then on March 23rd, which was actually the very, very bottom, I actually could see that we were going to, I wouldn't want to say could see. I thought it was very likely that we were going to bounce that day. I did not know how high we were going to bounce, but just on March 23rd, and I'll show you here on a chart, this was March 23rd right here, this bottom candle, okay? I told my trigger happy friends not to buy the first 1K drop, and now I told them today looks good for a bounce. And both times they were like, are you freaking insane? It's going all the way down. Now, the other interesting thing of this is around March 31st, which was just 1 week after the bottom, just 5 trading days, 1 week. You know, I said, I was in a sort of a conversation with a friend of mine on Twitter, RS Investor, and he said, you know, the logical choices are a V bottom or a bear market rally and reversal. I can't see a V in this scenario. This was only a week after, guys. Like, you know, this was March 31st, and I said, you know, I can't either, and that's why I like the idea. So where was that? Where was that? March 31st was right here. We were right underneath what I called the meow line, because I thought if we can get a close above that level, that dead cat bounce that a lot of people were talking about wasn't going to happen. And in fact, we did bull flag and then zip right over it, back tested it twice, and then to the moon. To the moon. But anyway, I drew this to I brought this to your attention because people were asking me constantly, are we at stage 5? Are we at stage 5? And I didn't see stage 5. I only saw a stage 4 the whole time. So we never really got to that part where I would have been like, buy. I mean, I did buy on the 23rd, but we never got to that point where it was obvious for me that people had just given up. And so that makes sense. It does make sense that according to this model, you know, because right now people are like, the Fed isn't going to let it go down. It's not going to go down until after the election. Like, I mean, it's just people have absolute, and I want to say the word sureness when they say this. And you know what? I don't blame them. I really don't blame them. But you know, I will say the absolute sureness that I've seen, and I've seen it for weeks now, I've seen it for about a month now, is disturbing. Only because none of us can be sure of anything. We can all have conviction in our positions, we can have a conviction in our opinions, but none of us can be sure of anything. So I try to be very particular about my language. Anyway, let's look at charts. So last week I talked about the fact that we had reached the measured move of this weekly bull flag. It was right underneath previous highs, and we had in fact gotten there. And I was a little bit concerned because we were under RSI resistance. I was thinking, you know, there is a chance here that we could flash up and then come back down, at least, and just build some momentum underneath this resistance. That didn't happen. We almost had 0 bottom wick, and we almost have 0 top wick. This is just a solid green log of a candle. And if you look at the size of this candle compared to the size of these other candles, and remember, the size of these candles as we get higher is actually much more of a percentage than lower numbers. So this week is a this past week was a really strong week. A super strong week. And there is still some potential divergence from these peaks. But it could continue to go up. It is possible. From looking at this chart alone, it is absolutely possible that the market continues to go up until we potentially hit this resistance at about 3604 or so, if it's this week. You know, it changes every week, but that is the pivot that I'm watching for this week. Another thing to watch, so it's either going to hit there, or potentially we might have an inside candle where we sort of start to build over this resistance. Or the third possibility is, I love how I'm just saying, guys, it could go up or it could go down, but I'm just trying to keep it real with you. This is only, you know, I'm just trying to say from this chart, you know, I don't have any kind of, I mean, this is bullish AF. This candle, bullish AF. It really is. It really is. So I don't see resistance here per se until this purple line. And it would only be technically bearish if we got back below this previous all-time high line. So, and that wouldn't even be bearish. That would just be like, okay, maybe there'd be a pullback. So we're nowhere near, at least from a technical perspective, bearish, at least on the weekly ES or SPX futures chart. We're just not. I want us to be, but we're just not. And I want us to be, not because I'm a bear, and not because I'm a mean person, and not because I want your retirement accounts to go down, but simply because longer term, I always like to see consolidation underneath a resistance as opposed to just blowing right through it. Because a lot of times when you blow right through a resistance without any sort of consolidation, it's not pretty longer term. That's all. That's all. I'm just looking out for the longer term, guys. So now let's look at the daily. So, you know, I've been teasing Eric Trump all this time, but this past week I went ahead and did a measured move of how right he was the last time he said he was all in. I measured from the bottom of the hourly time frame in which he tweeted to that peak, and then I measured from the top of the hourly time frame in which he tweeted to the peak. And I went ahead and marked them off with dashed lines here. And it did look like Thursday that we were going to turn around right at his measured move. Guys, I would have freaked out. I didn't publish my ES chart on Twitter because I'm like, this is really not good technical analysis, okay? Me doing measured moves off of people's tweets is really, I guess it's no worse than looking at lizard sightings and stuff like that. But I didn't want to do it. I didn't want to do it. But anyway, I am watching these two dashed lines just in case. Because I do think that if we get back below this dashed line, which is 3482.54, let me move this to the front here. And let me mark it 3482.54. Okay. Oops. Let's see. Put this in here. All right. I do think that we can get back below it, and then really this black line is the one that matters the most, which for tomorrow would be 3438.05. Then I'll think it has a pretty decent chance at going a little bit lower or simply consolidating before we get to our next move. But as of right now, other than the RSI being pretty extended, but certainly can go higher, I don't see anything technically bearish about this at all. It simply looks like it's in the middle of a leg up. Now I would say, or in a leg up. I don't know where it is in the leg up. So we'll have to see. We'll have to see. We've had a lot of green days in a row. As I said, this past week was extremely bullish. But it's a gambler's fallacy to think that after that many days there'd be a red day. There can always be another green day. I mean, look at this stretch, right? So potentially we're just grinding now higher and higher. I just don't see anything technically bearish from looking at this chart at this time. If I do, I will certainly tweet about it. And we have until this measured move at 3565.13, or sorry, no, 3564.94 to get to our Eric measured move. So we're still very much within the range of having it go higher before it goes lower, before it consolidates. Blah. All right, let's look at NASDAQ. Okay, so we've had bull flag after a tiny bull flag here, and then another breakout. And similarly to ES, this past week with the NASDAQ was also very bullish. In fact, this longer term channel that we fell out of, we sort of had that false breakout right around the time where I had shorted this black line level right here. We had that false breakdown, got right back up, back test, we're kind enough to back test it, and then just after the back test went straight the F up. And right now we're consolidating again. So I went ahead and took the same slope from before that I've used in the bull flags, and it certainly looks like our candles are meeting them every day. So the pivots that I'm watching for Sunday night / Monday, and it really, it can flash above them. These aren't, everything's not perfect in technical analysis. And the second we think it's perfect, it becomes predictable, and then it's not perfect at all, right? Because if it was predictable, everybody would be predicting it, everybody would be making money, and that's simply not possible. But anyway, the pivots that I'm watching for a close or potential resistance on Sunday night / Monday are 1202.29, and then on the channel bottom side, 11923.71. So a close above 1202 would be bullish, and a close below 11923 would be less bullish. There you go. I'm just going to say it like that because potentially this could just be a flag. Just calling it like I see it. All right, now let's talk about gold. Gold is simply consolidating here. It had a lot of volatility this past week because of the Fed. We did close above this pink line that I'm watching. So this was last week we closed right on it, and then this week we closed above it. So this is still technically very bullish, and for me it's not going to be even a little bit bearish, frankly, until it closes below this below the 20, which is these orange, which is about 1800 as of today. Or really though, it can get all the way to this bottom of this channel and 1723.6 this next week. Or is it that? No, wait, sorry, let me just get the right. As I was trying to see, remember I told you I never know when to. I'm sure, I'm not sure. For this week, it would be around the 1700 level or so. But the longer it consolidates before it does a touch of this channel, the more different this value can be. So I wouldn't necessarily expect it to go all the way down in this next week. But I'm just watching this line. And in fact, as long as we're closing above this line, which this past week was 1955, and this next week will be 1960.6 or so, it still looks great. It looks absolutely great. Very bullish still. Now you could say that there's potentially some divergence here, and there certainly looks to be, and it hasn't played out as of yet. We haven't seen any real correction. But you know what? Even this little, even some flag movement here can take this divergence and sort of get rid of it. So let's watch. But anyway, 1960 is the pivot to watch for a close for next week. Gold. Let's talk about silver. Same thing. It's got, you know, what I would call a pivot, or sorry, a pennant here on the daily. It you know, I had planned to either buy on a dip down to this pink line here, or on a breakout above this blue line. So let's look. I'm going to get rid of this one for now because they're so close. But next week, the weekly pivots I'll be watching are 29.20, and that wouldn't be too bad for me to rebuy the 2/3 I sold, because I did sell right underneath this 30 value. So I'd be okay with that, because in the meantime, what would have been consolidation, I have been making use of my money. So I'm going to either buy when it gets above this 29.20 level, or I'm going to wait for a dip around, which would next week, and potentially, again, I don't know that it would go all the way down, but next week it would be around 20.82 or so. All right, let's talk about oil. Oil finally last week, or 2 weeks ago, closed above this 42.16 level that I was watching that I said would be very bullish above. And last week was bullish, but oh my goodness, it's grinding up week to week. But unless you're a range trader, scalp. I mean, this looks just as, there's just not been a lot of oil volatility at all. So I wonder what it's waiting for. I wonder if it's waiting for another leg higher in ES. I wonder if it's waiting for another leg lower in ES. I do not know, but it is boring AF. It's really boring. And again, you know, as long as it's closed above this 42.16, I do think it's bullishish. But like I want to see something that doesn't just look like a wah wah. But for now, we have a higher high and a higher low for the past 2 weeks. I don't know. It's just consolidating. It really, I don't think, whatever the next move is, whether it's up or down, I don't think it started it yet. We'll have to see. I just don't think it started it yet. All right, now let's look at natural gas. Okay, so while the absolute price looks higher as of Friday, this was a contract rollover, so natural gas didn't in fact go down on Friday. And there is still a little bit of a gap there, so there's room for it to go a little bit more down before it goes back up. From an RSI perspective, I don't see any kind of anything that would indicate it would go down from here or go up. It just sort of looks, it's had a nice consolidation here as it's gone up. It does not have this, I don't see any divergence to speak of here. So I think it just actually looks healthy. In fact, a pullback here, I would welcome it, as I've been saying. I would really welcome it because I only had 1/3 of my position left as of Friday, and I haven't rebought it. So, you know, it could absolutely continue going to the moon, but I'm going to look for some sort of support buy here, or I'm just going to keep holding it until it goes to the moon of moons. But above this 2489, it's still very bullish. I find it very bullish. So I would love for it to actually back test this level, maybe even dip a little bit below it and scare some people before potentially squeezing higher. Yeah. So let's look at coffee. Last week I said in the video that if it didn't touch this bottom channel, it would be a lot more bullish for me than if it did, and lucky for us, it did not. So at this stage, next week I'm watching the bottom of the channel as 35.82, but again, I'll be a lot more bullish if it doesn't touch that than if it does. And then there's really, once it can get above this previous high of, let's see, let's move this. Once Joe, I'm talking about Joe here, not coffee futures, but once Joe can get above this previous high of 39.09, or let's call it, you know, yeah, 39 level, and close there, I'm going to say it's just, I mean, this is very bullish looking to me. I mean, we are now, just now, starting to see the MAs, one of them curl up, the other ones are flat. One more week of this should have these MAs starting to curl up. And especially, that's what I mean, especially if we don't spend too much time backtracking here and we just sort of go to the moon. This is a very, very bullish chart. So I am still very bullish overall. Natty, silver, and coffee. Very, very bullish, those commodities as of right now. Doesn't mean they can't have pullbacks, but I love the fact that Joe closed above this RSI resistance for the first time. It hadn't done that previously, but now it's above. And now, hopefully that just continues. Hopefully we don't have that little false breakout, but you know, this chart looks really good to me for more continuation. All right, make myself big. I hope this was helpful to you. I hope that you've done well the past week, and I hope that you'll do well this next week. And I look forward very much to seeing you around the interwebs. Okay, bye.